You used to trade in basis points, now you trade in fractions of a basis point. The real money sits underneath the surface. It's in the financing legs. Prime brokers make more money at banks than the trading desk. That is fragmented in crypto. So alongside privacy, the ability to protect who you are, what you're sending, what you're doing, you also have to think about how do you remove the fragmentation.
Fahmi Syed is president of the Midnight Foundation. He says privacy needs to be baked into blockchain infrastructure from the ground up. He also pushes back on Wall Street's view of crypto, arguing that the industry as a whole, for all the innovation, doesn't have great PR, before walking us through what real adoption actually looks like.
Can we play this in? Can this be the intro?
They're dancing behind the cameras. Y'all can't see it, but we can. What's up, everyone, and welcome back to another episode of the Market Run-Up. I'm your host, Erin Gambrel, but you guys know me as the Blonde Broker. Today's special guest on my show is Fahmi Syed. He is the president of Midnight Foundation. Thank you for coming on.
Thank you for having me, Erin. Lovely to be here. We're in Miami. It's warm outside. It's warm in this booth, but looking forward to the next half an hour with you.
It is very warm in this booth.
It's okay, but you know, you gotta if you're going to be in the kitchen, you got to stand up to the heat. You got to bring the game. So let's have this conversation.
I love it. We've had a wonderful week so far. We've got a few more days left of consensus. Done wonderful podcast interviews this week. I'm lucky to have you on. We met the other night, got along so well.
We did, yes. We're fellow Scorpios. So a bit of disclosure there for you all. So we're fellow Scorpios. We are loyal people who trust loyalty, and we're very passionate about everything that we do.
We are. Yes. We're passionate about interviews too. And I have so much that I want to learn from you, that my audience wants to gather from you. So we'll just go ahead and kick it off with my favorite. When people hear the word privacy, I think in crypto specifically, they still associate it with anonymity or hiding transactions.
Okay.
But institutions look at privacy completely differently.
Yes.
Why do you think privacy is becoming a requirement and not just a feature for the next phase that we're seeing?
Great question and a great way to start. So, thank you for having me, first of all. So when we think about privacy is fundamental right in your human world, in your human physical state, and also your digital state. You know, you and I met the other day. We shared some information. Some of that we can share publicly, like your name, where you're from. So I believe you're a Texan girl.
Yeehaw.
But we also shared some information which is private that we won't disclose to others, because ultimately that interaction was about building trust and truth. And as you build truth and trust amongst relationships, whether that's personal relationships or institutional or corporate relationships or entity to entity or B2C or B2B, it's about that truth. And that truth is also about protecting data, protecting information. And privacy is, there are regulations and laws around how data and people's information, private information is stored and held and shared. In crypto, the world of transparency and truth, which is part of the whole blockchain ethos, is, it's great. Bitcoin as a truth layer, as a borderless, censor-free application and infrastructure, phenomenal. But it doesn't mean that I want everybody to see what I own, what I do, when I do it, and who I do it with. Anonymity protects you to a certain extent, but everything you do is public. It's not only public today, it's public forever. It's immutable, which is one of the great things about blockchain. But being immutable means sometime in the future, an analytical firm, an AI bot even, will figure out whose wallet that was and what you were doing. And if you were doing things that you're not worried about, great. But, every now and then, even the best people in the world will do something and send a transaction to a place that they might not want to send it or be discovered. So privacy has to be a core piece of infrastructure. We're a great believer in that. From Midnight, it's about not only protecting data, but metadata. That is how you'll unlock the future of real blockchain adoption. It's about bringing that Web 3.0 ethos closer to Web 2.0 and building what I call Web 2.5. That truth layer helping existing businesses, but also giving comfort to you, the average retail person, that if my bank tells me I have an asset there, or I'm able to have margin here or access here, or my medical data, that they're safe and I can access them when I want with freedom. But at the same time, they're protected from prying eyes and from anybody else.
Yeah, absolutely. And I love what you guys are building at Midnight. I love the fact that you guys have been present at a lot of these major conferences, especially over the last year. And specifically, I'm very thankful for this booth that we get to have a private interview session, because before I was in a semi-private area, you could hear every single person walking past me. And like you said, sometimes these interviews, even before we shoot, we're not trying to disclose everything. I do want to get to know my guests, and they want to get to know me and create that trust. And speaking of trust and what we had talked about before, I did get to know you a little bit. Correct me if I'm wrong, but you said you spent 2 decades in traditional finance before you got into crypto, or nearly 2 decades.
That's correct. I spent over 20 years in the financial markets. My initial graduate job was in a very large asset manager. I was then very fortunate in my early 20s to work for a very small hedge fund. 10, 15 people in the room, innovative, putting tech, and whether it's software engineers, quant engineers, to help build a better asset management hedge fund product and business. I spent 17 years there. I learned so much. It changed my world. It opened my eyes to different things and different ways of approaching problems. How do you solve for certain issues in the financial world, regulatory impacts, and all these different things? And that was great. So I know the value of how you can grow. That business grew from 10, 15 people, $1 billion AUM, up to 45 billion assets under management. By the time I left, 400 people globally. One of the biggest asset managers, hedge funds of its type, up there with for the US audience here, a Citadel, a Millennium. But because they're English, they're a bit more circumspect about it, a bit humble about it. So, but the people who need to know. And that's the value of privacy, is you could access opportunities, liquidity, find price discovery privately. You can then go and execute that privately. You can then go and settle that privately. You can then move margin privately. And the only parties that need to know were the hedge fund and the counterparts. The world didn't need to know, because the alpha was not only in what they hold and how they hold the assets, but how they trade into it, how they then trade out of it. There's magic in that. You don't want that magic to be everywhere, because what it does is, if everybody sees it like they do on crypto rails, you then end up with alpha degradation. You get people copying that trade and the alpha gets squeezed, or you get people trading against it and removing the alpha. And by alpha, for those who are not familiar, but I know your audience will be, we're talking about the difference between being average and the value add opportunities that you can bring.
Well, then from your perspective, what are some of the misconceptions that Wall Street maybe still has about blockchain today?
It's a Wild West scenario. Yeah. I think the industry as a whole, for all the innovation, doesn't have great PR.
No.
Often because it's very tribalist and we don't work together. We are very, maxis around Bitcoin, Ethereum, Solana. We don't look at the core tenets that we all abide by and all believe in. So the PR is an issue. They think it's there for drug cartels in North Korea to smuggle, or Venezuela and other, unfriendly governments or entities to pass money around the world. But that's to imply that no big financial bank institution has never been caught out for breaching AML laws or rules and never been fined for that. It can go wrong in traditional finance, and they've had hundreds of years to fix the problem, and they still sometimes get it wrong. Crypto's been around, or programmable sort of smart contracts in crypto since Ethereum. So we're less than 10 years into that. So why do they think that we should have the maturity? So what they need to recognize is, how does blockchain, let's move away from crypto and just the pure trading. How does the actual technology, the infrastructure, the truth mechanism of blockchain go and actually augment existing financial institutions, existing financial rails? We at Midnight believe there are many opportunities to do that. And we believe that starts and ends with metadata and data protection.
Absolutely. And you've been building alongside Google Cloud and WorldPay, Vodafone as well, Moneygram, eToro, BitGo, the list goes on and on. What does it say about where the market is heading when companies at that scale are leaning into privacy-enhancing blockchain infrastructure?
Well, the first thing is, we're very proud of the partnerships that we have. I think it's testament to what we are doing and what we believe in. These partners aren't just infrastructure partners. They're not just building node operations to support our launch. But they also have scope and POCs in mind to actually bring some of their use cases to Midnight. In the case of Moneygram, private payment solutions that are compliant. In the case of Google Cloud, they've are recognizing the benefits of trusted execution environments for their clients. So their clients know that Google and others aren't prying into that data, utilizing the data for other purposes. But how do you provide proof of that?
Yeah. Creating
Proof servers, working with us. They recognize there's more to just supporting infrastructure, but how do you actually expand with that infrastructure? We have over 100 partners in our ecosystem ready to deliver. Some big names, some small names, innovators in Web3, new entrants into Web3, big institutions. We are, I would hope, a unifying, ubiquitous privacy layer that works not only in Midnight, but can extend to other blockchains, but also to existing Web2 partners.
And you worked at hedge funds. You were CFO at Parity.
Yes.
And now you're leading the Midnight Foundation. So when you zoom out and you're talking about all these partners, which 100 is a lot, right? I think to have that sort of distribution is kind of rare, and it just shows to really what you guys have been building. When you zoom out, we're watching this early formation of a completely new financial architecture. Or do you think we're still maybe mostly in experimentation mode?
We're moving forward. It's gone from early stage experimentation. We're moving forward slowly. Look, it takes. I think part of it's education.
Absolutely.
Part of it was did counterparties, did institutions believe in the tech? I think we moved beyond that. We see asset managers tokenizing assets.
Yeah.
We see the stablecoin revolution, and even US regulations are now bringing that in line with the Genius Act and potentially the Future Clarity Act. So regulations moving forward, technology is being accepted. Now it's finding the use case that takes it to the masses, that really shows that pivot from early sort of innovation to actually mass adoption. We do think that Midnight has a part to play in that. Technology is evolving so fast. And it's like the half-life of technology just decreases all the time. So how do you keep up with that? Well, to keep up with that, you need to be cooperative, not only in how you work with others, but how you create an ecosystem and tokenomics, the environment for people to come and utilize. I think a lot of blockchain has been designed about ownership. So if you think about you're holding an iPhone, so there's nothing private about that. Everybody can see it on the camera. And that iPhone was bought using dollars.
Yeah.
Dollars fiat, dollars, sterling, euros, yen. That is your gas fee of the real world. That allows consumption. You don't pay for that Apple phone in Apple shares.
No, I don't.
Because one, it will create a lot of price volatility around the price of the Apple phone for you, but also the way Apple has been growing and pricing, that becomes very expensive today compared to 10, 20 years ago. But more importantly, the Apple shares are an investment. They have a different time horizon to how you consume. That is, you can throw that away after a year, 2 years, whereas Apple shares, you might invest for 10, 20 years. So you don't want to cannibalize that asset to go and invest in or to, transact. But every blockchain is designed like that. Ethereum, own Ethereum, but cannibalize your token to pay for transaction. When it goes to $1 million, what happens to the network? It slows down, grinds down. So we built and designed a way that, whether you want to hold the asset, right, that'll give you access to the network perpetually. You get free gas fees forever from that one token. And if you want more gas, then you buy more token. But equally, if you're an institution that cannot hold a crypto asset on your balance sheet for regulatory reasons or for impacts on your balance sheet and your NAV and your share price, then you can come and get foundations, custodians who can delegate lease capacity to you. So then you can consume it. It gives you price predictability, cost predictability, capacity predictability. It's a different model. So it's just not tech. You've also got to think about how do people consume the tech.
Yeah.
Yeah.
Hopefully for this podcast.
Yes.
There's also a lot of conversation around tokenization that it focuses on the assets themselves. So we have tokenized stocks now. We have deposits, treasuries, RWAs, but the infrastructure layer underneath all of that matters just as much.
Yes.
You agree, I agree. What do institutions actually need before they feel comfortable moving large scale financial activity here on chain? Because I think it's happening. Yeah. It's slowly happening, but there's got to be another push.
Yeah. So when we think about finance as a whole, and we think of it like let's visualize it as an iceberg. The tip of the iceberg is what you see around tokenization and trading.
Yeah.
And because that's a visual part, it's sexy, attracts a lot of people. People think they can make a lot of money quickly. But in traditional finance, trading and commissions around trading and the money you make around, well, institutions has actually been squeezed. You used to trade in basis points. Now you trade, the cost of trading is like in fractions of a basis point. The real money sits underneath the surface. It's in the financing legs. Prime brokers make more money and more wider margins at banks than the trading desk. They have wider margins, therefore more investments going into prime brokerage businesses. Collateral lending, margin lending, all of that underpin the financial industry. That is fragmented in crypto. So alongside privacy, the ability to protect who you are, what you're sending, what you're doing, you also have to think about how do you remove the fragmentation. Today in crypto, if you want to go and trade, you have to pre-fund the trading. That is balance sheet inefficient, that is margin inefficient, that is financing inefficient. Large institutions have a very efficient model. So what entices them beyond privacy to come across? You need to solve for those problems. In Midnight, tomorrow at my keynote, we'll talk about how we think that Midnight could be a unifying layer with one private vault for all your assets on all chains. And you can represent that as a single proof of all your reserves, all your assets. Suddenly, if the right people are listening, I'm going to call them to arms and ask them to come and work with us. You can build a fully decentralized, private on-chain custodian, an on-chain clearinghouse, a private margin lending solution, which gives you better access to better finance, better leverage, better opportunities. That takes away the fragmentation, the inefficiencies, the separation that we see in blockchain. We've got to come together. I believe that there are many successful, good chains out there. We could be a unifying layer that can support all of them.
And you guys have been working around privacy enhancing infrastructure for quite some time, when kind of around the time when like global regulators are paying closer attention to digital assets. Do you think regulation is pushing the industry toward this better infrastructure and compliance standards, or could that be like a no? I don't know.
Regulation helps.
Yeah.
I was on a panel. It was a great panel, but there was a very sad comment on the panel. So I was
Really?
I was the only blockchain builder person on there. The other three panelists, wonderful panelists, were all from banks representing large global banks, tier one banks. And one of them said that regulation was enabling them to peer under the bonnet and start building. And that change in regulation was allowed them to move forward with innovation. And I said, isn't it a sad day when regulation actually promotes innovation? Shouldn't innovation drive regulation and direct them? And I said this very publicly in the panel, and they all looked at me and went, oh, actually, maybe he's right. When you think about the advent of, maybe when you think about how Google and those tech companies came, there was no regulation. Right. GDPR or the California Privacy Act around data management didn't exist. The regulators had to adapt to innovation and to technology. And they did so with consultation with, regulators, lawyers, but also the tech firms. Wouldn't it be great if the crypto industry could go forward and say, here's the way forward with innovation? And how does a cryptographic proof act as substantively as providing KYC evidence? Because it's that at the moment proofs aren't necessarily recognized as evidence in under regulatory jurisdictions. So how do we move forward with that? That has to come not only with the crypto industry working with regulators, but also working with large institutions. Because our voice is big, but one of the numbers that stand out is we think we're big. But in the world of Tradfi, which is a trillion dollar market, we're a drop in the ocean. So if you can partner with those kind of parties, whether it's financial institutions, medical firms, supply chain businesses, corporations like Coca-Cola and Amazon, they'll have a far bigger voice. And then maybe your voice gets heard in that room because they take you with them. Trying to constantly fight against the tide, although it's great if you believe in something passionately, it gets tiring. Working with the tide is a much easier way to get forward your, not only innovation, but to align your vision with how the regulators think about it.
I listened to Charles's speech on stage earlier today, and every time he talks, he's constantly pushing innovation. That should be his middle name, right? But he's talked for years about blockchain eventually becoming part of the invisible infrastructure of everyday life, of how we live, of where we go to work, everything that we use, our transactions. do you think we're approaching the point where users may interact with blockchain technology without even realizing it?
Yes, 100%.
Yeah.
And we have a use case at Midnight that I can talk about because it's exciting and it fits into the financial world. So a UK bank called Monument, they service high net worth individuals, so private bank for high net worth individuals, regulated by the Bank of England and PRA, one of the foremost regulators globally in the financial market, akin to the Fed and the SEC. They have, after years of searching, agreed to tokenize their clients' cash deposits on Midnight. Midnight, they believe, is the permissionless network that allows you to create a private domain for them to do this. They don't want to do a private chain because they don't want to build a chain. They don't want to go to a permission chain because somebody else gets to see all their client information. They were looking for a permissionless solution that allows them to go build without, censorship, but enables to have full privacy. So they're going to tokenize their clients' cash deposits on Midnight, starting initially with $250 million as a POC. If that works, then they will, try and bring up to, maybe $2 billion. I think if they 10 to 20% of their current AUMs on chain. That's just phase one. Phase two of that is then bringing in RWA issuances. We spoke about tokenization. The technology works. Yeah. And we know there's abundant supply. And almost anything can be tokenized. Not everything should be, but most things are. But where's the distribution? The average retail client, probably, I heard a stat from a central exchange, a very large central exchange, that told me the average client trades about $3,000. Institutions trade much larger numbers. They bring much bigger flow and much more stability in a very volatile environment. So through this mechanism, we can bring RWAs, fractionalized access to private hedge funds, private equity funds, base metals, and other things. Not money market funds, they're boring, go and buy them in the real world. You don't need them on a blockchain. And then those Monument Bank clients using their app, it's an app. It's just a Monument Bank app that sits on the Apple Store that they can download. They can move their money from traditional assets and yields into these DeFi opportunities. And they don't even know it's Midnight. It's invisible. Good infrastructure, good tech is invisible. When you use your Apple phone, you access an Uber app or the Amazon app and you do your shopping or you call a car, you don't know the 20 services it's calling. GPS services, Google Maps, comms with the driver, messaging, absolutely. All of that. You just see an app that delivers what you need. A driver who arrives on time and delivers you or takes you somewhere safely on time. Yeah. Amazon, your groceries get delivered. Good tech is invisible. And we want Midnight to be embedded in applications, client services like Monument Bank, where the client doesn't even know. And for crypto to succeed, we've got to stop talking less about our tokens, less about the crypto, and more about just being good, invisible, truth infrastructure.
Yeah, let's quit talking about price action.
Yes.
Everybody's actually been in a good mood this week, I think, despite volume and despite prices. I think it's been really good turnout too. And I think everybody has focused on infrastructure and building.
Yeah, look, I think the best things are often built in a bear market. Everybody can make money in a bull market. Everybody's got abundant cash investments coming in during bull market. The true believers, the true innovators are the ones who persevere through these bear markets.
Absolutely.
As I said to you the other night, I cannot control the macro environment. I cannot control, I've been given this fancy title, President of the Midnight Foundation. I'd rather be Prime Minister because I'm British, but anyway, President I am. But there are other presidents out there who go and do certain acts that have big macro impacts. Mm-hmm. I can't worry about those acts. I can't control what's happening to the price of energy, what's happening with liquidity crisis around private credit. I can prepare for those. I can protect against those. But what I can do is worry about the things that we can do at the Midnight Foundation with our partners. How do we deliver the tech on time? How do we find the right partners to showcase what Midnight can do and showcase that privacy embedded in the tech is just a feature that allows them to go and succeed? And if we bring more partners like Monument, and there are others that I will call to for tomorrow's keynote, then we win. We win in a bear market or a bull market. That's the focus that innovators should have, not token price go up, maybe spring some magic fairy dust, and we make more money, and then we ride off into sunset. If you're here for innovation, you want your innovation to be left behind as a legacy.
Absolutely.
And if we can do that at Midnight, along with our partners, and people talk about our partners, and the next time you speak to us, hopefully one of my partners is out here talking about how wonderfully well they've done and Midnight enabled that, then we all win. That's success. That's innovation. And the price action, it will fix itself.
We're definitely going to do more interviews. And you mentioned legacy. You knew this was coming. This is my favorite question to ask at the end of every interview. So, Prime Minister Fahmi, what is the legacy that you want to leave behind?
That I personally want to leave behind, or the Midnight Foundation?
Let's do both.
Let's do both. Very simple on my part, that people see me as a protector and a good person. That we did the right things by the people who work with me, the people who work with me, the foundation, my partners, the people at Shielded. If they succeed, then I've succeeded. Yeah. Success is not singular. It comes from taking everybody and moving them all up. So if people can look back and say, you know what, he was a good man and he delivered on his word and he delivered for us, then that's great. That's the only legacy matters. We come here into this world naked, we leave naked. You know, death is the one certainty apart from taxes, when taxes are, you know, something you have to accept, as with death. So you come naked, you leave naked. So you can't take your money to the grave. So if that happens, it's great. At the Midnight Foundation, if the people I work with, if the partners I work with, they are happy and they are succeeding and they tell their story and they are using our network, whether people know it or not, that is success. If people, I'm old enough to remember the laptop adverts from years ago, the Dell adverts, the Hewlett Packard adverts, and every time the advert finished, you'd get the Intel jingle because everything was those days powered by Intel chips. You get that little jingle, and so everybody knew that Intel was somewhere involved.
Yeah.
Wouldn't it be great with these adverts happen in the future? There was a jingle that said Midnight was powering the tools. That would be a great legacy to leave behind for the foundation.
I love that. That was a great answer. And I really appreciate your time for coming on the show. I look forward to a few more that we'll do. Hopefully we'll do one.
Likewise.
We can do one on the beach.
Do one on the beach. We can do one in the UK. Because you come over.
I do.
UK.
I am over quite often.
Yeah, I got to be careful. Don't bring in box gloves. You do tell me you do box.
Yes.
So if let's be kind to me.
We should do an interview while we box, and then in between rounds, I ask the questions.
Yeah, you remember my age. I did disclose my. Maybe that might be harder on me than you. So,
yeah.
We'll think about it.
We'll do it. And then we'll talk privacy too.
Absolutely.
Awesome.
Thank you for your time.
Yeah, thank you for coming on the show. Well, that was it, everyone. Thank you for watching another episode of The Market Run-Up. Please follow us, like, subscribe, comment, and follow us next week for more. We will see you later.